We ventured into the market with $100 risk and set our sights on the $200 profit target, maintaining a respectable risk to reward ratio of 1 to 2. This is Bitcoin versus US dollar on 15 minutes time frame. The price has reached a crucial support level. It's a very important level and it has often served as a potential turning point for price action. The price has 3 times rejected the support level. On 1 minute's time frame, price has also broken the downtrend bearish trend line. We waited for the price to break the resistance as well. As the red bars below the zero line shifted to green bars above the zero line, the MACD indicator also gives the signal of a potential bullish trend. The MACD histogram displays significant bullish momentum with pronounced big green bars indicating a widening gap between the MACD line and a signal line. This confluence of factors strongly signals an opportunity moment for entering a long position. The price action is currently forming a wedge pattern, and if it breaches below the trend line, it could potentially evolve into a bearish wedge formation. Impressively, the price has broken above the wedge pattern, demonstrating a surge in bullish momentum. Indeed, we are in a profitable position and making gains from this significant trade. Congratulations, we have successfully reached our profit target. That's an excellent outcome. A $200 profit from a single trade is a significant achievement. Let's zoom in on the MACD indicator, a key tool for traders. The MACD visually represents momentum with its line and histogram. For a trader, understanding these massive components is crucial for trading success. So these are the topics that we are going to discuss in this video. We will be releasing ton of new content every week. So make sure to hit the subscribe button and turn on the notification bell so you know exactly when the new content is released. Let's focus on the first topic. What is MACD indicator? The MACD moving average convergence divergence indicator is a popular tactical analysis tool used in trading. It measures the relationship between two exponential moving averages to access momentum and potential trend reversals, offering traders a probabilistic perspective. MACD line. It's basically a fast line calculated by subtracting a 26-period exponential moving average from 12-period exponential moving average. The orange one is a signal line. It's a slower moving line and it is typically a 9-period exponential moving average. These moving averages are the first two components of MACD indicator. The third component of MACD is histogram. Histogram provides additional information between the relationship of MACD line and a signal line. The main component of histogram is a zero line. When the bars are above the zero line, represented by the green color, there is a potential for a bullish trend. Conversely, when the bars are below the zero line, represented by the red color, there is a chance for a bearish trend. Let's discuss how the histogram is formed. Histogram gives green or red bars when MACD line, the fast moving average represented by the blue color, crosses the signal line of 9-period exponential moving average, which is basically a slow moving average. In MACD indicator, when the MACD line crosses below the signal line, it indicates a potential reversal. As soon as the MACD line crosses below the signal line, the bars started to shift from green bars above the zero line to red bars below the zero line. Vice versa, when the MACD line crosses above the signal line, it indicates a potential reversal. Here it is clearly visible. When the MACD line crosses above the signal line, the bars started to shift from red bars below the zero line to the green bars above the zero line. Let's dive into our topic number 2. How to use MACD. When the MACD line crosses below the signal line, there is a chance of a potential bearish momentum, a sell opportunity. Vice versa, when the MACD line crosses above the signal line, there is a chance of a potential bullish momentum, a buying opportunity. After the MACD line crosses the signal line, the crucial aspect is to observe the distance between these two lines. A wide expanding gap between the MACD line and the signal line signifies robust momentum in the direction of the crossover. This suggests a more significant and enduring trend change, providing traders with confidence in their positions. A wider and more gap between these two lines indicates strong bullish momentum in case of above crossover and a strong bearish momentum in case of below crossover. The narrower the gap between the lines mean weak momentum and there are higher chances of reversals. We do not want to see the narrow gap. Instead, we want these two lines to have more gap so we have a better chance of strong bullish or bearish momentum in order to get in a trade of higher probabilities. Price is in falling downtrend. In MACD indicator, the blue MACD line crosses above the signal line here. The candle on which the crossover happened point the line on the previous candle. The crossover happened on this candle. Put your stop loss beneath the low of the previous candle as this is the lowest point where we do not want the price to revisit. Let's see the result. Price never fell below that protected low, means there were enough buy orders of traders that resist the price falling below that low, resulting in a very strong bullish momentum that came after the MACD line crosses above the signal line. This is Bitcoin versus US dollar on daily time frame. The reason for the price that it made this bearish rally towards the downside is that crossover when the MACD line crosses below the signal line. The crossover happened on this red candle. We will set the line on the high of the previous candle. Despite the overall upward trend, the price experienced a substantial bearish rally, showcasing the power of MACD indicator. Even led the price to break the daily support below. Let's zoom in here. Here in MACD indicator, the MACD line crosses above the signal line. Ahead of that, both these lines move far away and gain distance, resulting in a big green bars above the zero line. All factors pointing towards a very strong bullish momentum. The candle on which the crossover happened point the line on the previous candle as this will be the lowest point where we do not want the price to go, resulting in a very strong bullish momentum. The price never fell below as there were enough buy orders for the price to keep above the low of the previous candle. The MACD crossover let the price of the Bitcoin move around $7,000 bullish. This is Ethereum versus US dollar on daily time frame. Now let's dive into a real world example. The price has broken a significant support level. This is a critical moment in trading because there are two possible scenarios. Scenario 1. The price continues to fall, indicating a genuine breakdown. In this case, we might consider shorting the asset. Scenario 2. The break below support was a fake out, a trap for unsuspecting traders. If this is the case, the price will soon reverse and head upwards, creating a buying opportunity. The price is showing significant strength with large green candles, seemingly neglecting the earlier breakout support, which now appear to have been nothing more than a temporary fake out. Let's zoom in on the crossover of the MACD indicator. In MACD indicator, the blue MACD line has crossed above the signal line. Histogram also has given the green bar above the zero line, indicating a potential bullish trend, a buy signal. Price has also broken a downtrend bearish trend line. There are also two resistance levels which also acted as support on various times has been broken, and now the price is coming for the rebound to that resistance which is now acting as a turncoat support. The downtrend bearish trend line which the price has broken, the price is also testing it here, making this zone as a key area of confluence for the buy trade. It's a very important area of confluence as there are many traders who are looking this area for a buy trade. The support and resistance traders, trendline traders, MACD traders, and the breakout traders, making this zone a very important key zone for the buy trade. Let's go to 4 hours time frame. On 4 hours time frame, we can get a detailed look on how many times the price has respected to our key zones. Let's go to 1 hour time frame for a more better look. The price has tested the trend line 4 times and now it is here again testing it. The price has also tested the resistance level many times and now it is again testing it here. Now, if you take a buy trade right away, it's okay. But what if you wait for a more precise trade entry? Let's zoom into the recent price rejection to our trend line and resistance level break. Clearly, the price is in a pronounced downtrend, as indicated by this prominent bearish trend line. There is a significant development as the price has convincingly broken above the bearish trend line. In addition to our trend line break, we have got another bullish confirmation from the MACD indicator. The blue MACD line has crossed above the signal line, signaling a potential shift to a bullish trend. We are going to pinpoint that last red candle before the anticipated upward move as the critical level where we do not want the price to revisit. The price has gained substantial bullish momentum after a clear rejection of our key zone, underscoring its significance in guiding our trading decision. This marks a perfect example of a winning trade utilizing our multi-dimensional trading strategy. It's worth noting that Ethereum has been in a strong bullish trend against the US dollar. Now let's zoom in on the MACD indicator. After a sustained bullish trend, we have observed a significant development in the MACD indicator. The blue MACD line has crossed below the signal line, resulting in a red bar below the zero line on the histogram. The crossover between the blue MACD line and the signal line happened on this green candle. Let's place the line on the high of the previous candle. That crossover had a significant impact, causing the price to plummet from $1,900 to $1,600, resulting in the $300 price crash for the Ethereum. This MACD crossover remains a key factor in keeping the price in a bearish trajectory. Let's talk about common mistakes. Traders often misinterpret crossovers. For example, MACD line crosses above or below the signal line as buy or sell signals without considering other factors, leading to losses. Some traders started to take trades blindly on crossovers, led to overtrading. Overtrading can result in higher transaction costs and emotional burnout. Relying solely on MACD. Using MACD in isolation can be problematic. It's crucial to incorporate with other indicators and factors to improve decision making. False signals in sideways market. Some traders enter trades based on MACD fluctuations in sideways market. When the market is not in trend, it led to false signals. Even if you take trades correctly, you can still fail because of lack of patience. Traders often expect immediate results and exit positions prematurely. MACD signals may take time to develop and patience is crucial. Emotional trading. Allowing emotions to drive trading decisions such as revenge trading after a loss or overconfidence after a win can lead to significant losses. If you like this video, then please hit the like button and subscribe to our channel and turn on the notification bell so you know exactly when the new content is released.